Hello and good morning in Europe, good evening in United States. This is Ahura with you with another daily outlook video. In these videos, as you know, we are watching what happened. We're kind of trying to see what happened yesterday in the market, what is going on right now, and what we have to expect from today's tradings. Uh, these days, the most conversations about the Mr. Biden's and Xi Jinping summit or virtual conversation it's about the bringing down the tensions, which kind of it was important, but it was not that much important, and the market could focus on them. Didn't change anything in the market, financial market, to be honest. Wall Street closed lower yesterday. The market risk is down. The market risk, we were waiting to see the market risk is going down after we had a central banks meeting. We had an NFP. We have the numbers that they could somehow increase the risk in the market. They could somehow increase the tensions in the market, volatility in the market, and we had already all of them. So that was the reason that we didn't see. We were not. We had nothing especially to change the market attitude, to move, to bring the volatility back in the market. So that was the reason that we were waiting for the lower weeks in the past days, as we were talking about that. This lower risk actually kind of at some point didn't help the US dollar index to not increase. As you know, we are getting closer to the year end, and as we are getting closer to year end, many companies and ETFs, they are trying. Oh, sorry, many companies, ETFs, and many organizations, they are trying to stay cash. So the selling bond deals is something usual to see. Usually, is something usual to see in the last 2 months of a year. So that was the reason that we saw increasing in the bond deals. Let me see that what exactly the number of the bond deals right now that we are talking. The bond yields increased to 1.60 again, to about 1.60, and helped the US dollar also to increase. This increasing the bond yields most probably can stop the higher prices for gold. So that was the reason for the US dollar to increase. At the same time, about the US dollar, we already talked last days, and we saw that the US dollar uptrend can continue, and there is nothing specially to stop it. About the gold, despite the yesterday's fall in the stock market, the weaker stock market, we were waiting to see it was normal to see the gold to increase. But as you know, as I mentioned, the reasons the gold didn't increase. In the stock market, let me talk about the stock market. Then I'll go back to the oil. About the stock market, the tech companies yesterday, in the beginning, they helped the futures and futures market to increase. But with the opening of the cash market in the States, the cash market didn't help the bargain. I mean, when we had the cash market and we saw the sales, especially in the Tesla, to come back down to what was the latest price, the closed price. I'm checking right now the closed price with the selling the Tesla and some other big companies, tech companies, the market was weaker. At the same time, as I told, we are getting closer to the year end, and staying in cash is much more appreciated than buying a new stock. So that's the normal. More than 20%. 20, more than $20, which is almost 2% slip in a Tesla stock, to fall back to $1,013. This is the $1,013.39. Is the price that the Tesla closed last night. Tesla and many other companies that we saw that they had a decline last night, they put again the stock markets under pressure. And as I told, we do not have that much encouragement to see the stock markets to increase in the last 2 months, in the past 2 months of 2021. So, weaker stock market is what we're waiting for the SP 500, Dow Jones, and Nasdaq for today as well. This is about the stock market and about the oil price. Yesterday we were talking about the oil price and when it was about the $79 here yesterday morning by the Euro time and evening by US time. We were talking the price of the US gold oil, sorry, US oil price was about $79, and I told these levels are the levels to see the oil to start increasing. The reasons that we saw for that was there was two reasons. Firstly, yesterday we had first of all I have to mention that yesterday we had the Chinese industrial data and retail industrial and retail sales data. Both of them they were impressive. They were with very good increase in both numbers. These impressive numbers they help the market. They hit the market attitude. So we are despite the many restrictions for the COVID-19, we can still see that the economy is recovering. And it's a positive news. It's a good news for the markets. So that was the reason to see the stocks to increase last yesterday, and that was the reason to see we were waiting for the oil also to increase. Today, yesterday they had, and also yesterday we had also other news. There is some news also, but however, this news that yesterday the energy minister or oil minister of UAE, United Arab Emirates, told that in January 2022, most probably we can see oversupply in the market because demand is going to decrease. At the same time, the U.S. government is pushing the oil companies in the states to increase the production level. So these things are the changes that we have to be a little bit careful about the oil market because there are many countries will be there are many countries that their economy will be under pressure with the higher oil prices, and they do their best to stop the oil uptrend from here. So for now, what we can see in a daily chart, the day trading chart. For the day trading chart, oil is still at a positive, especially if today we see the retail sales and industrial production numbers also higher in the United States. As you know, today we are waiting for US industrial production and retail sales numbers. Let's see what we had already. What already we had is that we had the RBA meeting minutes. Reserve Bank of Australia publishes meeting minutes for its meeting back in November 2. So they disconnected the interest rate with the 3 years bond yields, as we know. They have it in their announcement in their meeting minutes as well, but they emphasizing that they will not raise the rate until the economy is going normal, until the employment is can go back to its full employment number range, and inflation sits in the targets of 2 till 3%. The inflation target of the RBA is up to 3%. So as long as the inflation is not sitting in that range, as long as we are the unemployment didn't fall more and we are not in a full employment level, and as long as the economy is increasing normally, they are not going to change the rates. They changed also for GDP. They increased the GDP expectations for 2001, 2002, 2003 to 3% in 2001, to 4.25% for 2002, and GDP expectation for 2023 or 2023 is 2.5% for GDP. And for inflation for 2021 and 2022, they are expecting 2.25% inflation, but they are expecting to increase the inflation to 2.25 2.50, yeah, 2.25 it was for 2002. For 2003, they're expecting 2.50% inflation. So the targets already they're expecting to be in a target. So what's their expectation and what's their reality? So that means that the most probably we can see this week there was a law speech, a speech that he had earlier today, that he told they are not waiting to increase the rates before 2024, but the numbers are telling us that 2023 will be will be the time, even if they don't do at 2022, but at end of 2022 and beginning of 2023 will be the time to increase the rates for Australian economy. Uh, one of the reasons is that we can see the very sharply increase in wage in the in salaries and bonuses. This will put the inflation in next year's under pressure, and it will bring the and it will bring the economy in a normal situation. Actually, they are going to. This is actually we can see. We can see that in their announcement, also in their meeting minutes, that they are accepting that the economy in Australia is going forward in a very normal situation. So, U.S. dollar. We talked about the U.S. dollar, about the economic calendar today. Yeah, about the economic calendar, as I told today, retail sales and industrial production from United States will be in the spotlight, while ECB President Ms. Lagarde will speech, FOMC member Barkin, FOMC member Bostic, BOC Governor, Bank of Canada, Canadian Governor Council, uh, Shemi, what was that? Something like that. Shembri or Shemi. FOMC member Dolly. Today is the day of the special. As yesterday and in a weekly outlook, if you watch the weekly outlook, I told this week is the speeches week. We have many speakers this week from several from different central banks, and we have to follow their speech to see what they are going to decide in their next meetings. This is what we have for today. And about the let's go see about the currency market. Euro, generally euro still continues its downtrend against US dollar, as we are in a really downtrend, and euro USD will continue its. We are expecting to see that the euro USD can continue its rate lower. About the pound. The speed that increasing the US dollar, that we were waiting to put the pound under pressure, but at the same time we have the economic numbers from Australia, from United Kingdom, that they are doing fine. So that was the reason to hold the pound sterling. Well, like we can say that pausing its downtrend, but general overall trend for GBP is still a downtrend. In the crypto market, as you know, yesterday we had a news that firstly, yesterday from November 14, on Sunday, we had a new upgrade in BTC network. Is it Tailproof, something like that. Let me see that. Yeah, we had a new upgrade in. Bitcoin BTC network. However, yesterday at the same time we had the SEC is disapproved some ETF applying. I think ETF some Vanik, yeah, some Vanik or Vanik SEC, and let me see the companies that they this. Yeah, Vanex. Yeah, Vanex Bitcoin. They rejected their applying for the ETF, for their ETF. So this rejection from the ETF, and the main reason because that their ETF was directly connecting to the Bitcoin price, and it was this ETF it was depending exactly and directly on the Bitcoin price and the risk about the Bitcoin. So the SEC didn't approve this application because of higher risk that this ETF could have. All these totally together, and with not welcoming to the new upgrade in a BTC, not that much as it was expected. The market was probably expecting to see the much more welcome to this new upgrade, but it was not that, and that put the Bitcoin again under pressure, and we can see the BTC to move lower, and stay under pressure. So from technical side also, Bitcoin, Ripple, and Ethereum, all of them, they are back in a downtrend, and we can see them to move lower to the lower levels. For Ripple, we have to stay lower under $1.16, $1.16 for Ethereum, the level of 4,200 is the K level, and for Bitcoin, under 62K is the K. It's like 62K is the K level to be clear. But under 62,000 US dollar, Bitcoin can move in a clear downtrend, and if it can break above it, just come back above, return above 62K, the uptrend can start. But totally, we don't have that much or enough encouragement for the Bitcoin, for the cryptocurrency market, or totally in general, to move higher. Okay, guys, thank you so much for today for this video. Hope it was useful for you. See you guys tomorrow with the new market updates. Bye.